Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Welcome to the summer of 2022. The first half of 2022, one of the most dramatic repricings across all markets, but in particular across global rate markets that we've seen in a very, very long time. Financial conditions now tightening dramatically. We look at mortgage markets, we look at credit markets, certainly equity markets, risk assets, short term, trying to do a little bit better as the market really tries to figure out what is the Fed's end game here. So from the outset of this cycle, we had a few rate hikes priced in for 2022. We went from a dialogue then of pricing every meeting at 25 basis points, somewhat similar to what we had in the 2015 cycle. Then the debate went from 25 versus 50 in March. The Fed saying they wanted to move expeditiously toward neutral. Neutral now we know is somewhere in the range of 250, although we know that neutral is a complete enigma and it's more about financial conditions. And now the debate moving very quickly, 50 versus 75. Certainly over the weekend, you look at even some of the most dovish members of the Fed. San Francisco Fed President Daly intimating 75 basis points in July. The Fed wants to get close to neutral here sooner than later. They are finally now moving expeditiously toward that level, obviously in conjunction with the runoff of the balance sheet. We've got a long summer ahead. We look at prices in general. The Fed this week, Chair Jay Powell meeting with other central bank leaders, ECB forum. Really, what more can they say at this point? We know the task at hand, but what is really most important here, in our view, is the definition of inflation. Exactly what the Fed is watching. Recently, Chair Powell highlighting headline inflation versus core inflation, certainly headline inflation impacting inflation expectations. Michigan on Friday, we saw those expectations come down. And the reality is, if you look at market-based inflation expectations, you look at the TIPS market, say 5-year break even since March, since that first rate hike, we've been choppy, but we've been doing nothing but trending lower over that time period. But the reality is, what's the Fed's definition of inflation? Central bankers in general obviously have gotten this dynamic wrong. They've admitted they've gotten it wrong. More granularity in terms of why they got it wrong and exactly what they're looking at going forward with regard to Fed policy, which will ultimately be crucial in terms of the pricing of financial assets on a global basis, in particular risk assets moving forward, and giving some comfort to markets going forward, which obviously here are very hungry in terms of where the growth scenario plays out, the recession dialogue, the highest it's really ever been. St. Louis Fed President Bullard over the weekend saying he thinks recession is unlikely. And then Chair Powell in front of Congress saying the Fed is not trying to provoke a recession, which of course we know is true, but very upfront in terms of the likelihood that could be the ultimate outcome as the Fed tightens financial conditions and as interest rates go higher. It's showtime here for the Fed. Chair Powell knows he needs to deliver on these rate increases. We think the Fed will deliver on these rate increases. Whether it's 50 or 75 in July, we get a big gap between July and the September meeting. The most important thing here, in our view, is the Fed's end game. And recently we saw that end game, that terminal rate, priced close to 4%. We saw 10-year yields in and around 3.5%, really since the beginning of May, when the growth equation came in conjunction with this inflation dynamic. We have favored looking for opportunistic spots in and around 325 to 350 in nominal 10-year yields to opportunistically add duration. It's not going to be a straight line, but the market is trying to probe here where that Fed's end game will be, and in conjunction with that, obviously the roll-off of the balance sheet. So one of our themes for 2022, beyond being bearish, has certainly been a lot of volatility in this terminal rate, which we still expect to be the case going forward. On the ground this week, we do have this ECB forum, middle of the week. We will get other Fed speak. Obviously, economically, the highlight is going to be the Fed's favored inflation measure, the PCE deflator, which we get later in the week. And in conjunction with that, we get that on Thursday. And then on Friday, we get the ISM manufacturing numbers, which obviously the market's going to be looking at in terms of overall activity, but also prices paid. Wishing everyone a great week, wishing everyone a great kickoff to this summer. Wishing everyone a great back nine of 2022. I'm Greg Faranello. I'm head of U.S. rates for AmeriVet Securities.